Hey there, everyone. In today's teaching lesson, I'm going to take you through the process of forecasting corporate financial statements, and we're going to use Python as always. I always do all of these examples in a Jupyter notebook for a couple of reasons. It has dynamic plotting and charting capabilities. I should demonstrate that in a couple other videos that I created and posted on YouTube. And it's just easy to work with, pretty scalable, up and out, and pretty intuitive as well. There's a few other types of interfaces are similar to this. Databricks is probably the most popular one that has a look and feel like a Jupyter notebook. That's pretty nice. It scales over clusters of computers. So this and Jupyter notebook, this example, I'm just using one processor, my laptop here, ThinkPad, and in a Databricks environment, you would be running your notebook over a whole bunch of computers, probably with hundreds of gigabytes of RAM, so you can do much bigger calculations over massive data sets. And all the examples here, all of my data sets are fairly small and pretty manageable. So the notebook works pretty well in cases. So we're looking at forecasting financial statements, specifically income statement, cash flow statement, and balance sheet. This is critical for various strategic, operational, and financial reasons, just some of which include revenue, profit planning, performance evaluation, making investment decisions, just knowledge, insight into the business, right? Liquidity management, funding requirements, any kind of operational planning that needs to be done. These exercises are excellent for that. Any kind of asset and liability management, we'll look at an example of that in just a minute. Capital structure planning, risk assessment, goal setting, scenario analysis, simulation analysis, performance monitoring, stakeholder communication, right? You have to tell your shareholders what's going on with the business, right? And you have to file a 10K every quarter and 10K every year and a 10Q every quarter, right? If you're a publicly traded company, by law, you have to disclose your financials and show your shareholders what the heck is going on. If you're a private company, you don't have to do that. But you still have to do forecasting, whatever kind of enterprise you're running, whether you're public or private, so you understand what has happened in the past and make predictions, be able to make predictions about what is going to happen into the future. So let me show you an example. I'm looking at Microsoft in this case. I think this is pretty generic example, but very realistic too. So if we go on Yahoo Finance, we'll see Microsoft financials. So this is the balance sheet. Right. Oh, sorry. This is the income statement. So we have revenues, gross profit after cost of revenue, right? That's how much money it takes to run the business. You take out taxes, you have your net income, earnings per share, diluted, EPS, EBIT, EBITDA. Okay, so all the normal financials here. I have my MBA in finance. I finished about 20 years ago. Went to a top 10 school, great experience. I learned a lot about finance. So that's what was my motivation to put this video together, to help other people understand these income statements, balance sheet, cash flow statements, things like this, so you can make intelligent decisions about your business, your finance professional or accounting professional, and also how to do projections or how to do forecasts into the future and project what your income is going to be, right? What your items on your balance sheet are going to be, what your cash flow is going to be. So my wife is actually an accountant. She got her master's in accounting. I got my master's in finance. So I believe predicting the cash flow or forecasting cash flow makes sense. Forecasting income statement certainly makes sense. My wife actually told me forecasting items on the balance sheet makes sense. As a finance professional, I'm not sure if that totally makes sense. Do it. But I mean, you have to stop and think, does it make sense for your business to forecast items on the balance sheet? If you're doing a lot of M&A activities or mergers and acquisitions, it probably makes sense. If you're just growing organically, I'm not sure if that makes sense or not. It's really probably debatable. But the income statement and cash flow statement totally makes sense to forecast it. So let's get back to the Jupyter Notebook. You saw where the data was sourced from. Okay, I'm going to use a couple tools here in my Jupyter Notebook to go ahead and extract that data from that web page. So if I go down here, you'll see Selenium. I'm using Selenium and Beautiful Soup. I'm going to use a combination. I have the base URL here. This is finance.yahoo.com, Microsoft financials. I don't know exactly how many companies Yahoo Finance covers. I think at least 50,000 at this point. It could be a little more or less. I think 50,000 sounds right to me. So pretty comprehensive. And again, you can do this for any company, IBM, Microsoft, Amazon, Starbucks, right? Go ahead and pull in the financials and we will do the forecast. And I try to make all of my videos very generic, but realistic too. So I'm trying to create a scenario that you would probably encounter, in this case as a financial professional or as an accountant. If you work in operations or risk management, I don't know if you would really dip your fingers into this stuff, but perhaps. But I try to make all my examples relevant and realistic, but kind of generic too, so you can change the data source just slightly and make it work for your specific scenario, right? So if you're analyzing different companies, you would go ahead and replace this SFT ticker and pull in whatever you want, right? It could be Apple, it could be anything. Or if you're analyzing your own privately held financial data, then you would plug in your data here, right, to make it relevant. So we're taking this from the web. So I'm going ahead and screen scraping this data and then giving the headers assignments with the following names, the breakdown, TTM, 24, 23, 22, 21, right, so on and so forth, just to match what we see on this income statement over here. If I go back here just for a second, that shows the balance sheet. Let me get back to income statement. So that is exactly what we see here. Breakdown, TTM, that's trailing 12 months. Okay, what happened over the course of the last 12 months on a rolling basis. Then you have 6/30, so that's when Microsoft closes its books for the year. Some companies use end of December, right? December 30 or 31. How many days are there in December? I forgot. 31, I think. Then September. I'm sorry, getting confused now. Sorry. So 6/30, 24, 23, 22, and 21. So that matches what I have in the notebook over here. Okay, doing some screen scraping to get that into a data frame. Let me control enter this, refresh it, and show you how it works. Okay, just so you know, I'm not just like pasting a picture into the window or whatever. This actually goes onto the internet, screen scrapes the data, and produces the data frame for us. Okay, so it just opened the browser. I can see Google Chrome flashing right there. It's doing what it needs to do. Basically, looking at all the rows and looking at this div class, table body, it's YF. I'm sure it's Yahoo Finance, IPGOOLF. So that is the identifier for all the rows. So I'll show you real quick how this works. If you go over here, this isn't a screen scraping tutorial, but I'll take you through it anyways. So let's click here. So go down here. This isn't magic, right? All the data comes from HTML that is rendered behind this page here. So if I right click, I have inspect. This pops up and it's going to take me right to that HTML element on the website. And when I mouse over it, it's going to be highlighted in blue. You can see the blue is coming up right there. There's the blue. And if I put the mouse over it, you can see the div class right there, right? So that's how we get all of these from the website. If I go to cost of revenue, that's the next item. These are basically just rows in a table, so it's pretty structured, so it's pretty easy to get this stuff. I have a couple videos that I posted on YouTube about screen scraping. Some of these are very intuitive and very straightforward and actually quite simple. Some of these are not simple, but in those other videos I got into the details of how to do screen scraping. So we have the numbers over here. If I go over here, here's the row, and you see cost of revenue. So I put the mouse over it, you see the blue box. That's sort of the parent level, and this would be the child level over here. All right, and then you have cost of revenue. So take a look at that. If you understand, or if you teach yourself screen scraping, I think it's an extremely valuable skill to have, because you can grab any kind of data from the web, which is a very dynamic place and very enriching place, right? There's tons and tons of useful data online. You can go ahead and grab that and pull it into a data frame and then do all kinds of analysis. So we have the static data frame here pulled from the web. So that looks great. Let me just scroll down a little bit. Okay, now we're going to go ahead and create the first model here to try to do a forecast of what we can expect to happen for 2025, right? So we have 24, 23, 22, 21, 4 years of data. I want this model to tell me what can we expect next year for 2025, right? So we're using exponential smoothing. So this is a time series analysis. This is all temporal. Anything that shows transactions over a period of time, it's a time series analysis, and several models that we can use to analyze these. Facebook Profit is one. I just finished a video about that. There's several ARIMA, SARIMA, LSTM model, exponential smoothing model is another one. There's several time series models that help us to understand what has happened historically and then make predictions into the future, what's going to happen next. So this has run, it's saying 2025 forecast is 149 million for total revenue. Okay, and let me scroll down a little bit. 149 mil, and then we're looking at 268 for tax effects. Let's go back and look at 24, 149 mil, and let's see what it actually was in 2024. Uh, 245. So that seems way low. I don't like this exponential smoothing model. Total revenue is 245, and it's been for 2024. It went up a little bit since 23, since 22, since 21. So Microsoft is growing every year. The total revenue is growing year over year, right? TTM indicates the same. That's just a moving average. But this model, exponential smoothing model, says it's going from 224 to 149. So I don't want to be the one to tell the executive team, hey, we went from 224 last year to next year we're gonna do 149 million in revenue. I don't want to be the messenger for that scenario, and that seems very unrealistic too. So I'm gonna say the exponential smoothing model is not working, and you know what? That's totally fine. Totally legit. It's just not the right model given this data set. So let's look at another model now. This is the ARIMA model. Let's go ahead and run this. And that's what data science is all about, right? You have an idea, you have a hypothesis, you test your hypothesis. Does it work or does it not work? And also you can answer questions, why is it working or why is it not working? And try to understand any kind of causal inference, if that's going to help you understand why something happens. I created a video about that. That's very interesting too. But you have to understand what's happening, and does it make sense to go from 245 million down to 149 million? I don't think that makes any sense. So I'm going to not use that model, right? I'm going to try another model. This is the ARIMA model, and now we're getting 156 million. So again, pretty low. We had consistently increasing revenue for the last 4 years. I don't think it's going to fall off a cliff and go from 250 to about 150, just over 150 million. I don't think this makes sense. So I'm going to say again, the exponential smoothing model is not working. The ARIMA model is not working. And that is fine. It's totally fine. We're just trying different approaches to figure out what potentially could work here, okay? Because I don't know. I don't know what's going to work, but I have to try a few different scenarios and then see what actually works here. So again, we had 254 million. I'm running Facebook Profit. It's doing a similar type of time series analysis for us, like ARIMA, like exponential smoothing, but it's a little bit more sophisticated type of process, and it's going to help us handle these nuances and the variances in the data. So I think Facebook Profit is going to outperform the other two models. And this is not always the case. That's why you have to try several different models and see what the output is. But let's try this one and see if we can get better results. I don't want to go to the top leadership and say, hey, we're going to lose $100 million next year, so you better brace for it. I'm not going to be the one to deliver that message. Okay, so let me go back just quick. 245. Okay, almost 250 million last year, and again, it was up consistently over the past 4 years. And Facebook is still running. I see the hourglass at the top of my tab here in my notebook, so I know it's still running. I see the asterisks. Okay, so it's doing a more sophisticated analysis, more thorough, and the results I think are going to be a little bit more realistic and more impressive too. So let's see what this thing comes up with. It's still chugging through. It's giving us some information here. So it's doing several iterations of processing. The other models are very simplistic, very much classical statistical analysis. This is a much more rigorous and more robust type of analysis on this time series data. So let me go up. We had 245 for 2024, right? Whoops, skipped up a little bit too high. Let me go back. And this pink stuff over here is totally fine. It's just messages. I think we can turn that off. I guess I forgot to do that before I ran that, but that's fine. So now we get total revenue of 269 million. So this sounds much more realistic. The last 4 years, the revenue has been increasing. We're at 254 currently for 2024 at the end of June. That's when they closed the books. Now we see 269. That's the forecast for total revenue for next year. And let me go down to the bottom here. We got 269 and negative 189 for tax. So 189, 269. Let me go up here and look at ARIMA and exponential smoothing. I'm looking at 189 here. Let's go up. Okay, so ARIMA is saying 156. We know that is way low, and 180 positive. Okay, so just want a quick sanity check. We see here is exponential smoothing, and I'm looking at the last line item here. Tax effects 268 positive. Let's go back to the actual data. Okay, tax effects negative. I just saw it skipping around a little bit. Negative 99. And that's the last item. And we got everything in between. I'm just trying to highlight a couple line items here. And the first is 245 million. So we go down to profit. And I think these numbers are going to jive pretty well. So 189 negative. We had 99 negative in the last case. And then again, the revenue, if I scroll up just a bit, we see revenue is at 269. Okay, so I think Facebook is clearly the winner in this case, and we have an excellent forecast for 2025 with not a lot of work. This was quick and easy to put together. You have everything you need, and we can go ahead and start setting up meetings with people and say to them, does this make sense to you? Talk to the finance people, talk to the accounting people, talk to operations, talk to the management team, talk to the couple people in the C-suite, right? You want to get this in front of the C-suite executives and say to them, does this make sense? This is just an estimate. We're just doing a quick hypothetical forecast here into the future, but it's a great starting point. And with very little effort, you can come up with very realistic numbers and say, look, this is what we think is going to happen. What do we have to do to get here? We can talk to the salespeople. Okay, we're expecting revenue next year, 269 and some change. How do we get there? So set up meetings with different stakeholders and different teams. I don't think risk trading needs to be involved. Definitely management, operations, finance, sales teams. You set meetings with these guys, say, hey, this is my total revenue. This is my cost of revenue line item. This is the gross profit. That's the difference between the two. This is operating expenses, operating income, right? So you go through each line item with all your stakeholders and just say, does this make sense? Yes or no? How are we going to get there? You let me know what you need from me, and I'll help you execute on this thing. Okay, so that's it. That's pretty much how to do the forecasting. I have cash flows as the next example here. I will go ahead and screen scrape this, Control Enter to refresh. I'm not going to redo this exercise because I don't want to spoon feed people, but it's exactly the same forecast and profit that we saw above. You would do the same for the cash flow. Okay, to forecast the cash flows into the future. Income statement and cash flow statement totally makes sense to forecast these, right? And when you get these numbers, when Facebook spits out the result, you take to different stakeholders, again, management, sales, it could be IT, operations, maybe even HR, right? If you're going to up your revenue, you might have to hire some more people to get there, right? So talk to the HR team and say, does this make sense? Is this realistic? How are we going to execute on these goals and objectives, right? And that's it. So there's a very quick and easy way to do the forecast. Very simple effort. Just one person put this together, myself. Now we have to set up some phone calls and some meetings with different people and start getting this thing towards the goal line, right? And we have one more here. I went ahead and screen scraped the balance sheet. You can use this for a bunch of different purposes. I don't think, again, it really makes sense to forecast items on the balance sheet. My wife says yes. I guess it's up to you. And if it makes sense for your business to go ahead and do that, then go for it. You have what you need. I'm going to share all this code. When they upload the video later today, I'm going to share all the source code so you have everything. I don't expect you to take notes and to keep up with everything. It's pretty fast paced here, but I will share the code with you so you have everything you need. You can download this, double click the file to open it. This is going to be an HTML file. open it, run it on your Jupyter Notebook, see how everything works, and hopefully this is a good learning opportunity for you. Okay, I learned a couple new things putting this together. Hopefully you will too. I have a couple more notes here about why we should be doing these forecasts and why we should be undertaking these types of analysis. I won't take you through all this. I might get a little bit mundane and prosaic at some point, but all the notes are in here for your reference if you need that kind of stuff. Okay, so again, hopefully you learned something new. Thank you so much for your time today. I really appreciate that. And please have a wonderful rest of your day. Thank you so much. Goodbye.